sans plus tarder, je vais présenter Lee Shepherd. Au niveau de ce qu'on fait, de la fiscalité, Lady Hodge en a parlé, l'information, c'est important. Moi, one of the first author that I read is Lee Shepherd. So Lee is a lawyer. She's one of the Lee. I'm going to say it in French. Lee. Okay. Lee a été nommé sur le Global Tax 50 Most Influential Players in International Taxation by International Law Review. She's elle est manifestement une des commentatrices en fiscalité les plus influentes au monde. Lee a fréquemment écrit dans le Tax Analyst. Elle a encore un blog pour Forbes. Donc, et elle a des idées vraiment intéressantes, avant-gardistes. Donc, dans la foulée de qu'est-ce qu'on peut faire, comment qu'on peut s'impliquer. Lee, c'est une chercheuse indépendante, donc elle démontre, elle est l'exemple qu'on n'a pas besoin d'être attaché à une grande organisation, on peut faire voyager nos idées. Donc, sans plus tarder, Lee, merci.
Thank you. It's difficult to follow Margaret Hodge. I am honored to be sharing a stage with her. I have a couple of preparatory things to say before I get to the question we were talking about. I want to say a couple of things about BEPS, and then a couple of things about the United Kingdom, and then, sort of set the stage for what are you dealing with when you're talking about the United States and its multinationals. With the BEPS, you really have to lower your expectations. I know that a lot of people in this room were very disappointed that BEPS was not going to lead to the holy grail of formulary apportionment, but you have to realize what its limited purpose was. It was a European project to shore up the existing system of separate company accounting and transfer pricing. It's patches on the existing system. It's got to be allowed to run for a while and allowed to fail before you can get to something better. And, eventually the Europeans themselves will move toward formulary apportionment among themselves because they've already got, the European Commission is already working on the common consolidated corporate tax base. That work will continue, and when these governments look at this stuff and see how those that have not put it into effect already, because some have, see how complicated it is, they will start asking for something like that. And I just wanted to point to a couple of items because, when you hear a lot about, well, there were developing countries in these negotiations, which had a lot of countries in them and were very difficult to get agreement. This doesn't do anything for them. And it was a huge missed opportunity in that sense. In that when you look at the big items, there was a chance, even within the existing framework, for radical simplification that was not taken. And the big item for me is interest deductions. If you got a robust, simple, no, you're not going to deduct that if it's paid to a related party, interest deduction rule, because most of the income stripping that we're talking about is real easy to explain. You create a debt between this affiliate and that affiliate. It pays interest that just happens to strip out all its local income, and it deducts it, okay? A rule that says, no, you're not going to deduct that, that's pretty straightforward. That chance was not taken. We have something that looks like the German rules. Those are fine rules, but those are complicated. Also, when we look at, actually the big achievement as far as people in this room are concerned in BEPS is company-by-company reporting, country-by-country reporting. That is a huge achievement because at least it will cut down on telling different stories to different governments, because that was a big part of it too. Just tell the other government something else. And there will be less of that. Another little piece I want to point to for folks in this room, there is an item that was put in there to make the multinationals happy, and that is it's down in bottom of the list. It's a recommendation that countries put arbitration in their treaties. No, okay? This is the same kind of private arbitration that you see in bilateral investment treaties. It's a bad thing for developing countries, and no developing country should ever sign any kind of document with mandatory arbitration in it. Now let's get to, I'm going fast because we're going to run out of time. United Kingdom, okay? The United Kingdom is turning itself, and Richard Murphy will confirm this, is turning itself into a corporate tax haven. It has low rates. It obstructed a lot of the rules that people were trying to get to in the BEPS negotiations. It has very friendly tax enforcement. It has rules that are needlessly complicated to obscure what they're doing and not doing. And so what you have is you have UK headquartered companies that won't be paying what Mrs. Hodge would call their fair share of tax. And you have, because of another thing they've adopted called the diverted profits tax, it means that foreign multinationals, and most of the time we're talking about American ones, will be paying more. Which was very actually cleverly designed, but what it teaches you about the way countries act and what happened in the BEPS negotiations is that when countries are asked to put their cards on the table, people suddenly become very protective of their own multinationals and are suddenly not willing to do a big rewrite of the permanent establishment rules because, oh, heavens to Betsy, our multinationals would have permanent establishments in those other countries. We can't have that. So now let's get to the United States. And that's the reason I'm talking about the United States so much is because I don't have experience with campaigns in other countries. There are two very peculiar aspects of the United States that you have to take into account if you're trying to start this kind of a campaign there. First is that the government and the multinationals and the military establishment are all kind of intertwined. And tax is really, I hate to mix metaphors here, but tax is a small piece of this. Tax is the tail of the dog. When you look at, well, what is the relationship of U.S. multinationals to their own government? What is the relationship of U.S. multinationals to other governments? What is the trade policy? What is the military policy? What kind of concession and extraction agreements are these multinationals signing with developing countries? You learn that corporate income tax is a very small part of it, and also that the United States' view, and you saw this in the BEPS, is that, their companies are not going to be paying more tax to other countries unless the United States government consents. I mean, you saw this in the BEPS. There were things the United States government tried to stop. There were things the United States government tried to water down. The other thing that's peculiar about the United States is what, it was Francois Mitterrand called the dollar the exorbitant privilege of having the reserve currency. I mean, all day long we've had people talk about, well, you have to have taxes to have spending. That is not true in the United States. It's actually not true in any country with its own currency that's a strong currency, but it is especially not true in the United States. The United States' federal taxes are only 20% of gross domestic product. That is about half of what we're talking about in European countries. It's actually less than half some European countries. And in the Depression, the bankers and the economists discovered, wait a minute, we don't need to tax for revenue. We don't need to tax to spend. We create money. We push it out into the economy. We use tax as a monetary instrument. We use tax as a system of rewards and punishments. We use tax as a way to subsidize certain things. We use tax as a way to price our subsidies, but we really aren't taxing for revenue. So you cannot really say of the United States, well, if corporations don't pay tax and they don't pay much, somebody else has to pick up the tab. They don't. Individuals don't pay much tax in the United States either. Nobody does. It's a very low tax place, and so you cannot make that connection between taxes and spending. You see this in the military. It costs $1 billion a week to bomb northern Iraq. Nobody sits around and says, where are we going to get that $1 billion? It's a continuing appropriation. It's not even subject to the budget rules. We have these budget rules, and they sort of constrain what you do with the taxes and spending, but they're just a creation of Congress, because when you have the reserve currency, you can expand and contract whenever you want. And when we're told, oh, we can't pay for that, it's usually something that the person telling us that doesn't want to pay for. If there's something they want to pay for, they'll find a way to pay for it. It's not like, well, if this or that big company paid more taxes, that would get done. It's not true. If this or that company could pay more taxes, and that still wouldn't get done, especially when you've got an economy and a very big military operation, which really is bigger than its nominal presence in the budget. That also, you get into these guns and butter equations that crowd things out. So let's get back to, well, what are you going to argue about if you don't have to argue about revenues? And let's get back to what works. The main reason, well, there's two reasons. You want to tax corporations, you want to tax all income from capital, and you also want to talk about taxing those closely held, they need not be small, unincorporated businesses and businesses that operate as partnerships. So all income from capital across the board. First of all is fairness, and that's what we're really talking about today, and that's where you have to have the argument that these entities and these people have to be seen to be making a contribution, even if it's only symbolic, because we want the system to be fair, but also we want the perception of fairness, even if the system is not fair in other ways. The other thing, if you were thinking as an economist, what you would want to think about is you don't want companies paying their executives too much. You don't want asset bubbles. We're in a grotesque asset bubble of our own deliberate creation in the United States now. You put on taxes for the same reason you put on higher interest rates, to stop asset bubbles. So you have to, because asset bubbles, they make everybody very happy at the time, but they're not a good thing in the long run. So that's where you have to have the debate. Now, Blanca Moreno Dodson and Lady Hodge both were talking about complexity. Oh, okay, well, complexity. Okay, so complexity, I would like more than 5 minutes. Complexity is also expensive for smaller countries, and I don't just mean developing countries, I also mean small European developed countries. They should not have to devote significant amounts of human resources to tax administration. The United States is big, we can afford complexity, but it's not something that the United States should be, through the OECD and through the system that we have, imposing on other countries. Consumer boycotts, I love consumer boycotts, those do work. If you're dealing with a company that's got a headline risk, they know that. And there are, look, I've talked to tax executives who say we're gonna leave a little in. You need the information. This is what Elise was talking about. Having the information and being able to say, yes, we know you sent $74 billion through these islands and didn't pay tax anywhere on it is very necessary in these campaigns too, because otherwise they're left to say, oh, you don't know how much tax is going out the door. Well, a lot. Occupy the SEC, the Occupy movement got a little spate of publicity in the United States, and then it fizzled as a public news story, but it did live on. There is a group called Occupy the SEC, which files comments when the SEC sends out guidance, and they are listened to. And what they have is they have experts, they have people who are in the business, and those people are helping file these very intelligent comments that the SEC is forced to listen to. So it's not like, oh, we have to just banish the technicians from the discussion. You need the technicians. You need the technicians to help lead you out of it, and you need the technicians to be able to fight the nonsense that's going down. Back to the UK. When it turned itself into a corporate tax haven, you have inversions, and those were mentioned today. There was an inversion into Canada. And inversions are not just from the United States to other countries. They're fiat inverted out of Italy, okay? Inversions are a wonderful thing as a campaign tool because politicians get very upset when a company that's a household name inverts to another country. Even if they're the kind of politicians who normally wouldn't want to raise this company's taxes, the idea that it just runs away, it's very bothersome to them. That's about it. I can answer questions or hear comments or whatever you need. Am I out of time here?